Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, October 9th. Michael Boutros here with you this morning. Great to be with you guys. Aurelian, Dagan, Iman. We got Pete, and Peter here today. Ty, Michael, great to see you. Chris, always a pleasure. So, as I said in yesterday's piece, I'm not really a big fan of anything right now, to be quite frank with you. I'm flat. We got stopped out of a dollar CAD position yesterday. I was talking about that right before the webinar, or right in the webinar. It blew right past it. So a couple things we'll be looking at. Obviously, we'll take a look at the DXY and the current sort of levels that we're still trading right at resistance. We'll talk about Euro, which is actually the biggest loser against the dollar today heading into the US trade session, dollar CAD, Sterling, very interesting setup, and Sterling Aussie. That trade we've been talking about for so long is still sort of working out. Don't have any open positions here, but you want to watch this stretch that we're making currently. Aussie yen and dollar yen for the yen crosses, and gold and TNX. Just looking through the headlines today, and we'll talk about that in a moment. Everyone's looking at the 10-year yield. Peter, I do see your question on crude prices. Did you have something pressing on that? Did you want to do that early in the session, Pete? Let me know. Hey, Dagon, great to see you, sir. Okay, Peter says no. Okay, so we'll hit it in due time. Crude is very important. I actually did put out a weekly chart yesterday on Daily FX, but we'll show you the near-term targets here today. Okay, let's jump right in. As I was saying, I do just every morning, quick habit, just to go through the headlines, see what markets are looking at. Quick look over at CNBC, Bloomberg. You're seeing a lot of talk about the treasury yields, whether it's the 7-year, 10-year, whatever yield you're looking at. Also, the IMF came out and made a reduction in global growth for 2019, small cut there. And you're seeing those headlines pretty much across the board. That's Bloomberg. Here's CNBC. Everyone's looking at the 10-year yield. These things, the IMF there, again, these things are taking the market's attention. You're seeing that we are seeing markets trading heavier ahead of the open. So Dow, Nasdaq, and S&P futures are all still in the red. So broader risk looks like it's still on its heels here, but we do have the dollar still rallying. So what are we doing here with the dollar? The last update from the DXY, I guess, was last week. We went over it in the webinar yesterday on Daily FX. If you're with us, the levels remain unchanged. Okay, we're trading right back at the high we closed, 93.13, currently trading, 96.13. We're currently trading at 96.10. And our premise, heading into the start of the week was look higher, but we're looking for 96.13, if not 96.71, both of these levels to offer the exhaustion trade. The high week close for this year is 96.13. The high day close for this year is 96.71. So both of those levels, I'm looking to see if we can get some sort of reaction off it. Here's what it looks like on the daily chart. I guess we should start with the weekly first. It's a big level. The main reason why I want to see resistance hold here is not just because of the high week reversal close, but also downslope resistance. Pitchfork off the 2015, 2017 highs. There's the 50 line. Actually, I think this is the 38.2. Yes, 38.2 line. You see support, break, acceleration, held resistance back in August. Right there. High week close converges on that slope. So if we do get a pop here, guys, look at this. The yearly high converges on the same parallel we've been following from the 2011 lows, and that still gives you resistance into 96.98. So it's wait and see. It's wait and see. You know what I mean? We have to see what reaction we get off one of these two levels. Ideally, this holds in U.S. trade today. But even if we were to spike, guys, intra week into 96.98, as long as we don't close the week above 96.13, I still think you have to weigh the risks of a move lower. Ty says reverse head and shoulders on the 4-hour, pointing to 60 pips higher on the euro. 4-hour head and shoulder points to 96.70 exactly. You're talking about this level. Well, this is the weekly chart. Here's the daily chart. Reverse head and shoulders. Which one? This is on the dollar index. Are you talking about the 4-hour chart? Let me see what you're talking about here. Not sure which head and shoulders formation you're noting on the DXY. Don't see anything too pressing here. So 96.71, is that miss? No, 96.71. It's the high day close for the year. So keep that in focus. One of these two levels is what I want to see hold as resistance. Again, there's nothing pressing necessarily on the intraday charts to put us in now, but I'll be watching this closely. Here's the 120. And again, things that we look at in momentum, right, to give us a help, a little indicator on what the momentum profile looks like. Overbought, overbought, overbought on the pullback, support at 40, break into above 60, break above 60. This is still a constructive momentum profile. Okay, we want to see that 40 level start to give out. A couple of dips below 40 would be pretty helpful. And not to mention that you still, we marked divergence all into these highs last week. So it's there, it's ready. It's just we need to see something in near-term price action tell us what to do here. Ty says, why is that not a head and shoulders? I'm not sure what you're looking at here as head and shoulders, Ty, just to be honest with you. I don't see it. This is the 2 hour, but even on the 4 hour, if anything, a lot of people are looking at this being a head, this being a left shoulder, head, right shoulder, but this kind of refutes that formation. So we'll have to see how that looks. Okay, Euro, the opposite side of this trade. Let's just take a look at that. So remember this on the weekly chart. This is going to be paramount, absolutely paramount, okay? Here's Euro. Or I guess we should do Euro on the weekly chart first. Okay, same thing with Euro. It's the same exact setup. Low week, reversal close. Remember the DXY, we were looking at the high week reversal close. This is the low week reversal close. Converges on up slope support. Just like the DXY had its high week reversal close converging on downslope resistance. Euro is the low week reversal close on uptrend support. So again, that's 1436 as a sort of main level you need to look for. If we break below that, there's nothing until 13, okay, 12.99 to be exact. That's the actual swing low that we made. That converges just ahead of that of the 200-week moving average and upslope support. This is the 50 line you see here in blue. So look, it's a big region. I'm going to go ahead and remove this just for the sake of clarity. This was another slope that we were working with. Okay, just going to remove that to keep this clean. And watch this level right here. Watch this level right here. A downside break, like I said, 13.18 to 113, the moving average confluence with that swing low. But these are two levels that you're looking at on the Euro. So 2 levels on the DXY on the upside, 2 levels on the Euro for the downside. We want to see near-term exhaustion start to materialize. If you're holding shorts in Euro, I wouldn't bail, okay? But I certainly would be bringing in my stops and doing something if we get to 1436 as far as taking some profits on that trade. Here's what the intraday chart looks like for Euro. Let me show you the daily first. This was my problem with it. Okay, this was my problem with it. So not going to be a stickler with this slope, but I certainly want to see how today reacts. Yesterday in the report, this is why I updated this chart, was because I wanted to see this hold. This is pretty big. Okay, these red slopes that you see here are all derived from the high that you made for the year. So this is the yearly highs. We took a parallel of that for the February low. Support, break, acceleration was resistance. A little messy here, but nonetheless a decent pivot. You take that same slope, extend it off these lows, caught that low. Take this same slope, extend it off this low, 1 touch, 2 touch. What do we do here today? Okay, this is the daily chart of Euro. So if we close below this, you're looking for 114.11. The ideal scenario, again, I'm always talking about just my humble opinion, guys, is that we get an intraday spike into 114.11, it holds, and we close the day back above this 1450 level, this confluence median line. So that would be a pretty telling event if we did see an intraday spike into this level, but we closed the session above this region. Here's the intraday charts. Here's the 250 minute. So within the confines of the decline, just from the August and September highs, we've been working with this slope. Parallels have been acting pretty decent, pretty clean. Here's the move lower. So again, an intraday spike into 114.11, give us that 786 retracement, maybe a tag of down slope support would be the play for the rebound to the upside. But it's either a drop into here or a break above the 2016 high close 1530 to put us constructive. Until that happens, guys, the risk is still for this thing to drop a little bit lower, just like the DXY, possible move higher there. Does that make sense, guys? On Euro? So you're obviously going to continue to find these headlines coming out about the Italian woes, as it were. Italian finance minister today will defend his government's fiscal targets in Parliament, with opposition lawmakers set to grill him on the plan that spooked both European Union and financial markets, and that he has resisted. So certainly some commentary there on this whole Italian debacle. Look, guys, I don't spend too much time stressing these things. I don't spend too much time, looking into the details of what government is going to be formed in this nonsense. I just want to know what the market headlines are, and then price action is going to deal the rest, right? So yeah, there's room for a little bit lower in Euro, but I don't want to get too excited. Like I said, if you're holding shorts into 14.11, 14.10, I'd be doing something. Okay, my stops would be break even, if not already, on this trade. For me, for new exposure, I'm looking for some exhaustion down there. Questions, comments on Euro? Does that help? Does that make sense? Iman says, yes, it helps. Thank you. Brilliant. Right on. Yeah, I'm a little disappointed because I did want to see this hold last night. I was hoping to wake up this morning. We were kind of already testing 1530. Market has something different in store. So we'll see if we can't find some support just above 114. That is Euro. No change to any of those levels from yesterday. Sorry about that, guys. So these levels unchanged. If we get a drop down here, we're looking to see if we can get some exhaustion. So that is Euro, number two. Number three is dollar CAD. So this thing is going to give me an ulcer. So remember I told you last week I jumped into a short, maybe at the start of the week, as soon as we opened the week, I said, looks like I may have jumped the gun, okay? A little bit early on the advance, and here's the move higher. So we're looking to see if this holds below 30, okay? This slope has been pretty decent. That level, okay, at 7.8, I think the 7.86% line has been resistance, converges on the 7.64. We're looking for a break below 29.23, 29.24 to get this thing going. We're still holding this range. I thought I had missed the initial entry, didn't get in because we were too far off the highs, but here's the rebound and we're right there again. So this thing just doesn't want to make a move to the downside yet. It's all about this hold. If this breaks and we get one last spike into the upper parallel, that's fine and dandy, but I do not want to see a daily close above 30.11 specifically. Would you be buying at 14.11? You're talking about Euro. So if we get to 14.11, Dagon, I'll be looking for exhaustion in price. Yeah, I'd be looking to fade a spike. It depends how price reacts there. That's why I always tell you guys, my strategy personally is not a swing. So I'm not going to put entry limits and just let it play out. I want to be here and see how price is reacting there. If we get sort of a sudden spike, that's the best way to play it, to fade that higher. But we have to see how it reacts. At the end of the day, Dagon, if it plows through this, you're probably going to see like accelerated losses. The break of downtrend support is typically the sharpest part of the move, right? The break of downtrend support. Oops. There we go. So if we break this slope to the downside, I would expect to see this thing accelerate pretty hard. But watch 14.11, yeah. Make sense? So dollar CAD, when you say react, do you mean 5, 10, 15-minute charts? Yes, Marco, 100%. Yes. You're not going to be looking at it on a 2-hour chart for the reaction because you'll have no clue, right? So we want to see, I'd probably say a 5 and 10-minute is what I toggle back and forth. 15, you're starting to get a little too dynamic with all the ranges, but usually a 5 or 10. You like the 15? Hey, if it works for you, Marco, I'm with you. Don't change if it works. But I tend to look a little bit closer in price. So for dollar CAD, it's a good thing I didn't feel FOMO yesterday, fear of missing out, and kind of jump into the short um, against this high. But that's basically what I'm looking for. If we get a spike here and a pull lower, I'd love to fade against 130. My concern is, guys, that the dollar still gets a little run, pushes this into the upper parallel before reversing. Sort of the same thing that we're looking at with the euro. So I don't have a position on this yet. Here's the 5. We might as well look at it. Here's the 10. Right, so you're seeing some divergence start to materialize here. Remember, we can get as many divergence points as the thing wants. They're both above 70, so it's a weak signal. So if price were to push one more time, fail ahead of this, and you had another divergent signal with a point reference below 70, that might be a decent entry, but it's just not there yet. Any questions on dollar CAD? Okay. So hopefully we can get some play in this soon. See if we can hold here in dollar CAD. Number 5, sterling. Here's the British pound. Here's the British pound look like yesterday. So look, at the end of the day, a topside break here is favored in the sterling. That's what I gave you guys yesterday. I'd rather be playing the long side, but I gave you 2 points of reference, and that's really what I'm focused on at this point. It's either a 130 drop and find support here at this confluence region of downslope support and current upslope support off of the August lows. It's either a drop into here for a possible long entry, or if we break this region, 3165, 3155. 3155 is the 618, just of this near-term decline. 3165 is the 4-hour out reversal bar that we made back here in the high on the 18th of, or excuse me, on the 26th of September. So it's a break of this range, essentially, is what I'm looking for. Now, ideally, again, we get a downside move here. Try to get a deep cut so we can get a stop against that low if possible. But again, it's really a break above 3160 that's going to set this apart for sterling. Here's what it looks like on the daily charts, just to give you a picture of the broader picture for sterling. Right? Nice median line break. We've kind of been dilly-dallying here. You can imagine a scenario, again, where you get a little bit deeper, but there's 130. Okay, there's 130. So, that's kind of the ideal hold if we can get a hold there to get a bounce higher. So do you think we have seen the low in sterling at 129.25? 129.25. Oh, are you talking about the month? For the month, man? I can't make that definitive, say until we break the opening range. Man, look, the thing with sterling that I really like is that the opening range for the month is super clean. Okay, here's your monthly open, guys. I usually don't put a marker there, but okay, here's your monthly open. Here's your monthly opening range high. Here's your monthly opening range low. Really well defined, right? What's that range, E-man? It's right between the levels that we noted yesterday, 129.05, 128.77, and then 131.60 on the upside. So the opening range for the month is taking shape right between two critical levels that we're looking for. And, I can't make an assumption of this being a major low until we break those highs. So yeah, if we break through 31.65, I guess that won't help you at that point. That would suggest that, yeah, we've broken the monthly opening range to the upside and that we want to respect that low. The one sort of assumption that I think both myself and Jamie have made is that this is a much more concrete low for sterling, largely speaking, for the year, this August. Yeah, I don't know if it's going to be the yearly low, but certainly is a much more significant low. This, I can't make that assumption until we at least clear the monthly opening range. Does that make sense, man? I favor it to the upside. So if you're asking me personally, my humble opinion, yeah, I like 29.25 low in sterling for the month. That being said, that's just my humble opinion. We need to see price action clear 31.65 to validate that. Says yes, thank you. All right, right on. You're more than welcome. Any questions on sterling? Okay, keep in mind tomorrow you do get industrial production, manufacturing production figures from the UK, but aside from that, nothing major. All right, sterling Oz, number 6. This is actually the sterling cross that I favor playing more, oddly enough. It's an odd cross. It's not a very popular pair for sure. Excuse me, but the levels have been super clean. So this has been a trade that we've been following for some time. Here's pound Oz last night. We were working, if you remember last week, guys, with a downslope here. It broke. The material strike was very, very strong. Took out all our topside targets. I think the last target that I noted on this one was 87.19 or something like that. So we still have a little bit more room. That's up here, 87.19. So look, we started the week on Sunday, basically hinting that we're looking for a resistance hold. Here's pound Oz into the start of the Sunday trade session. It looked like it was, at resistance. We had price in overbought territory as far as the momentum signature. So early in the week, it was trying to find some resistance along this line, if not that confluence there or that confluence there. So we got the initial exhaustion trade. It moved lower. First targets were 85.08, and then the median line. We've plowed through both of those. And basically the risk, essentially at this point is for us to see still one more low in price. So here's what it looked like last night. Here's what we look like now. Get you the 120-minute chart there. Okay, you're seeing that we're holding up a little bit ahead of the lower 50 line right here. So 84.21, that's last Friday's low, and it converged last night on that 50 line. So I thought that'd be a decent target. So we load at 84.47. That level is 84.21. Don't get too stringent on this if you're playing this short. The move was really this sort of tag of the median line. So if we get a break higher, I wouldn't want to fade this again because you're in an upslope. The question or the play for me was this drift lower. Again, it was a really quick one. I didn't even sit in it too long, so I'm not in it anymore. But I still think you possibly get a drop near 84.20, if not 83.59. This is the high day close from back here in March, okay, of this year. And the 38.2 retracement, just the advance off of the lows that we made in late September. So both of those converge on the lower parallel here, around 83, let's call it 83.60, 83.59. That's a level I'd love to get long at. If we get a drop into here, I'd love to look for some exhaustion, possible long entries, inevitably targeting 87.19. This is a big, big, big zone. So just to give you, again, a quick reference, this basic trendline support or channel support, 1 touch, 2 touch, 3 touch. We took those parallels off here, was perfect support, 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 support. Same parallel, extended off the highs from September, converges all up here. 87.19, key 618 retracement, ascending parallel resistance, and again, channel resistance. So the levels are pretty good. Don't have any open positions on this. The only position I did have was a short. Again, I might have gotten a little too trigger happy, probably taking too much of that trade off, but should have left a little bit on. We'll see. 84.20 and 83.60 are next levels of interest on the downside. We want to get long down there. Pound Aussie, questions, comments, concerns? All right, Aussie yen. So we've been tracking Aussie yen for a couple of days now. And another one where the larger turn that we were looking for last week really materialized. I think our last target was 80.14. Okay, here's what Aussie yen looks like now. And here's Aussie yen now. Okay, so 80.14 is the 618. Oh, guys, I removed it just for the sake of clarity. Here it is, though, the 618 at 80.14. That was the last target that we had noted on that report on Sunday when we opened. So, look, it's in an upslope, largely speaking, for Aussie yen. Here's what the daily chart looks like. Okay, we're in this broad formation off the yearly lows. I also have this embedded one. This is what you see on the scalp chart. Okay, this really near-term one. But largely speaking, you know, I guess I should just show you the weekly. This is my problem with Aussie yen. Well, first of all, Aussie's like falling through off a cliff. So that's one thing. But I do like, at least near term, trying to play that yen strength. So look, this is the main level that you need to focus on for Aussie yen. I just want to highlight this weekly chart. Again, nothing's open on this right now, but your top side's around 82.50. Your downside still 79.50, 79.25. I'm still going to watch this region, even though we broke through it. Still going to watch that as a key region in price. Just a decent pivot in price overall. A 1618 extension from the highs and a 618 off the lows from 2016. So very significant from Fibonacci standpoint, from swing high standpoint, you name it. So this is my sort of concern. You know, it wasn't an outside reversal week last week, but it was a reversal week that took us much lower. I still think you can get a little bit more of a drop towards here, but I don't want to target anything beyond this. This is pretty big, okay? And if this is a break of upslope, support, break, bounce, and test as resistance, then we're in for a deeper cut here for Aussie yen. I don't know. What I do know is I need to give reference to that 79.50, 79.26 level. So for the near-term picture, I haven't been presenting you the daily and weekly charts, guys, because of such uncertainty there. This is the only thing I'm really looking at. Is just the near-term picture for the chart. So near-term resistance right at the weekly open. That's why I removed that 618. So go ahead and work with me on this, guys. Okay. Initial resistance right now is the weekly open. That's 80.25. We tested it twice in overnight trade. Downside support from here is still 79.50. Okay. I would like to get a long entry or look for exhaustion if we get a move down here. Again, if you're holding shorts from last week, your stop should be at the weekly open. If not, if you're in from a decent region, anything northbound of 81, a stop against the weekly opening range high. But you know, all things held constant, sort of the ideal scenario for me would be a one more low. I don't know if we get all the way down to 79.15, but an attempt, maybe with some more divergence, would certainly be beneficial for us to try to squeeze in a long position there. Digon, that's where I'm looking. Oh, 83.60? Is that a typo, Digon? Oh, on pound odds. Sorry, I must have missed that one. Yes, if we get down into 83.60, again, I would be looking for entries. Yeah, I'd be looking for a possibility for exhaustion down there. So he says, sorry, I'm a bit slow today. No worries, Dagan. You're talking to me. I'm still feeling under the weather, so no worries, sir. Aussie yen, any questions? Going once, going twice. Look for that possible drop near 79.50 for support. All right, dollar yen, the abomination. Make a move, for the love of God, this thing. So we've been looking at it for the last couple of days. I loved it early in the week because we were looking for a break of that descending channel formation. So again, just to bring in the scalp chart or the update from earlier in the week on the Sunday open. Here's dollar yen. You know, we were talking about this ascending channel formation, looking for the break. Essentially, more importantly, 1308 is the break that we would need to validate a move lower in price. Okay, so basically we're looking for the high day close for January to give out. We slipped just below it yesterday. Classic dollar yen abomination moves. Slipped below it. Here's the recovery, and now sort of we're straddling the key support region, former resistance region that we're looking for. So look, I still think we move lower. Below the weekly open, 1376 is what I have as resistance at this point, or at least let's say bearish in validation. A downside break, you're looking for two key major levels, 1265, 1270. It's a basic 38.2, the advance off the lows from August. Okay, it's also the 2018 yearly open. Okay, so your first target, second region would be 112.16. I wouldn't be chasing anything lower than that. That's just a 50% retracement, decent pivot in price, support, break, acceleration, resistance, break, acceleration, support. I mean, depending how far off, if this lasts for a couple more days, next week it converges on the lower parallel. But that's my thought process for dollar yen. I think even if you get another stab towards the highs here, you look to fade it. I'm just looking for a new low in price to at least satisfy a near-term correction within this uptrend. All right, so still think the risk is for another stab at the lows here before you move. Interestingly enough, I was just looking at this morning. I have access to IG client sentiment, which is basically just telling us IG client holdings. And as it stands right now for dollar yen, there is a net exposure on the short side, which is not good considering that we want to see it move lower. So actually, that's a bullish interpretation of positioning. And you're also seeing that long positions are starting to wane as well. So the fact that there's an increase on the net short side is a little concerning for this. So expect the unexpected here, dollar yen. If we get into 1376, I would love to see that be a fake out zone to try to fade the position, but we'll have to cross that bridge when we get there. Like I said in the update yesterday, guys, for the sort of teaser, I'm not really a big fan of anything here. I need price action to give us a little bit more play. A lot of indecision, a lot of major tests of major critical areas that are being pushed, but the momentum profiles on all of these is like just non-existent. So that's dollar yen. Still think you can see some sort of rebound here, but ultimately we want to see that fail ahead of the weekly open. Okay. Those are all the major crosses. Let's go over your questions in the order that they came through. We want to take a look at, we'll definitely take a look at gold. And guys, real quick, the TNX, I'm just going to keep bringing this up to you every day until we see some sort of reaction. Excuse me, guys. Sorry, I take a sip of water every couple of minutes. The medication I'm on is just give me a horrible dry mouth. But 332, 328, right? We talked about it yesterday. That's the swing low from back here, the opening range lows for January in 2008. Then we had the 100% extension from the advance off the 2016 low, median line resistance, and the 1981 channel resistance in red here. And they all converge right around 332, 328. So watch that region of resistance, especially with all the news headlines. Bloomberg, Wall Street Journal, CNBC, they're all talking about the 10-year on how it's at record highs and all this. No one's really looking at the technicals, and technicals still don't have us breaking resistance. So please don't get sucked into these comments. You know, you hear these people give interviews on CNBC, and it's just like, man, where are they getting these people? But in any event, this is big, okay? Watch this region of resistance. Till this gives out, we're still not, we did have a near-term breakout, but largely speaking, it's a real important region. Okay, absolutely critical. So if risk turns over more abruptly, when I say risk, I say equities, right? If the S&P really turns over abruptly, that might offer some fuel for flows into treasuries. And if that happens, remember, treasury yields and price are inverse, right? So if there's all of a sudden a rush, if you will, quote unquote, to safe haven assets, you see a lot of traders moving or shifting into treasuries, that'll actually push the yield down. So before everyone gets all super excited, we're not quite at resistance just yet. Keep your eye on that for a tell for the US dollar as well. Okay, so just a quick note there on the TNX. But let's take a look at gold. Excuse me, crude here for you, Peter. Then we'll take a look at gold. Here's crude prices. The intraday chart is a mess. Oh, this is the wrong. Whoops. Wrong chart, guys. Sorry. Here's crude on the weekly. Okay, this is what I put on Daily Effects yesterday. Major levels to keep in mind: 74.94 and 77.26. Both of those levels are absolutely important. Okay. 74.94 is the 2011 swing low. 77.26 is the 2012 swing low. But in and of itself, that's not just it. It's also what these levels converge on. So obviously, the 2012 low converges on basic trendline resistance from the 2008 highs. Okay, crisis highs in crude, tagged again in 2013, tagged again in 2014. That level converges on the low for 2012 at 77.26. Just ahead of that is the 2011 low, which was the spike, basically the spike high that we made back here in June, but also it's the close lows of the year, essentially right here. So look, it's at risk, right? Below these is what I said yesterday. One of these two levels should offer some kickback. The only thing that would put me interested in buying up here would be a more concerned correction towards lower parallel, or if we break 80.60, we're probably going to see some serious acceleration. 80.60, 80.89 is the 1618 extension of the ascent off the lows that we made in 2016. So I'm not really stressing that, but I am stressing the 618 retracement of the entire decline from 2011, and that gives you 80.89. Okay, both of these levels converge on the median line over the next couple of weeks. Okay, so if anything, the levels are pretty clear. We're looking for failure ahead of 77.26. 80.61 is what would be marked as resumption of the broader uptrend. Key support is all the way down to 67.83. That's the weekly chart. Okay. Also bring your attention here to the momentum oscillator, which is continuing to consolidate as well. We need to see a trigger break here on a weekly close basis to give us a little bit more of an indicated fuel to the upside. All things held constant, while below this, you're still at risk. Still at risk. Here's crude on the daily chart. Okay, so there's that same slope. 50 line is basically support. Note that this is also the weekly the monthly open. I guess it was last week's open as well, right here. It's your monthly open, 73.50. Ideal scenario, you get some kickback. Okay, you get a pullback from these levels just on account of where we are, right? In the broader scheme of things. Last week we spiked, we just missed 77.26. I think the high registered at 76.88. Okay, so we didn't quite get all the way up there, but we're looking for signs of exhaustion in crude. Here's crude on the intraday. Peter, I don't have anything on this for the intraday worth note. These are levels I've been looking at on my end. I didn't publish these on SB. Again, it's a low conviction in my humble opinion, but this is the charts and levels I'm using. If you want to take a snapshot, feel free to do so. Looks like we are in the midst of at least a near-term correction or turnover from the high. So even if we were to get like a basic 38.2 retracement, you know what I'm saying, that's still down at 72 and change. So I'm of the mindset that you still have a little bit more of a drawdown to go before we continue higher in crude prices. Pete, does that make sense? Does that help? He says yes. Okay, cool. Yeah, you're more than welcome, Pete. Cheers, sir. I might be interested in getting a position on this myself here. Hmm. One thing, bear with me one sec. Sweet. Tentatively, I want to see 75.40 hold as resistance near term to play the correction. This is still a bullish trade guide, broadly speaking, right? No one's going to argue with me. This is an uptrend, but certainly from these levels, I think it warrants some caution. We'll revisit this. Gold. Next up, that was crude number 8, 9, 10. Gold is number 11. If you have time, euro yen. Yeah, I'll take a look at euro yen for you, Marco, 100%. Here's gold. It's going to be a huge week for gold one way or another. I showed you guys this chart yesterday in the webinar. I'm going to keep showing it to you. It's also on the update from Sunday. This is absolutely paramount this week in gold prices. Look, the October opening range is magnificent because I love the spot where it is. The opening range highs comes just shy of 1214, 1215. Remember, this is our near-term bearish invalidation level. A break here would certainly have us looking higher again. And key support, as we said, 1180. Okay, now ahead of that, you have basic slope support off the yearly lows. One touch, two touch, three touch confirms. This is a daily chart. Excuse me, a daily chart. So, intraday, if we spike into 1150, not the end of the world, but certainly I do want to see a closed basis respect above that parallel. I do want to see 1180 hold as support, and a topside breach above 1215 would mark resumption. So the levels are pretty clear. You have a clear-cut support trigger as well. If this gives out on a daily close basis, and so does 1180, bad news. Okay, if that happens, bad news. Okay, till that does, I'm looking for signs of exhaustion here in crude still as well. Here's the intraday chart, right? We have this pitchfork yesterday, modified pitchfork off the low, August 18th or August 15th, August 28th high, and the recent low we made in September. Median line held resistance, 50 line break saw acceleration. Here's the lower parallel. I really want to see this hold here. Like I said, intraday, if we spike into 1180, fine, but any lower from that, and you have to kind of bail on the idea that this is going to move higher still. All right, make or break for gold this week. I said it once, I'll say it again. Huge week. Amen. Any specific questions here on gold? Okay. That's everything on my list. Euro yen. JPY, and that was for Marco. No, thank you. Still holding my long exposure since last week in gold, huh? Since last week. Okay. So yeah, I mean, look, it's make or break it. I'm not sure where you're long from, but if we break last week's low, I'd really get concerned. Not my favorite scenario. I do favor us holding, but if it does give out below 1150, or excuse me, 1180, that's pretty problematic for our assumption. Okay, so keep an eye on that. Stop 1183. I mean, if you're 83, you could just put a break-even stop if you don't want to leave leave that risk out there. I don't think there's anything here to refute it just yet, amen. Just know that we're at a make or break level. Below 80 is quite problematic for gold. Okay, euro yen here for Marco. Marco, I was looking at this last night, and I was actually going to put an update on it, but I just don't know how I want to attack it from here. The one good thing, I shouldn't say the one good thing, but the thing that has been decent with euro yen is that on the turn from last week, it was pretty clean. It was pretty clean. Failure to push above the upper 50 line. Okay, continue to hold your resistance. Once we broke the parallel, we checked the 50 line on the downside, turned ahead of the parallel. Once we broke the 50 line, acceleration, check the 50 line on the upside. You know what I mean? It's just super clean. Here's the break of uptrend support. This is off the lows that we made back in August. And the first decline takes into a 1618 extension off the highs. That's 2932, the low we registered last night. was 29.34, 2 pips off. Just below that is a 50% retracement of the advance. So this zone here, Marco, on Euro Yen, is what I'd be watching, at least on the near term front. In fact, if you take that parallel, extend it off that swing low, it even drops this confluence region to here. So watch for exhaustion. If you're holding shorts on Euro Yen, area of which you want to start booking some profits and bringing your stops in. But I'd actually be interested in seeing how we look here on near-term price if we have a fade opportunity. Here's a 30-minute. Seeing some ongoing divergence in price action. Price action to the lower low, lower low, lower low, higher low, higher low. So divergence is there. Remember, we're only looking at the closes. Forget the wicks. So boom, 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 all lower closes. Boom, 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 all higher closes. In fact, even something like this, guys, this lower low and this higher low, something like this tends to be very subtle, but tends to work actually pretty well. So I wouldn't be too surprised if we get some upswing on this. I have already banked 60 pips, but I'm unsure from now, says Marco. Okay, Mark, you're on the short side, huh? Yeah, look, you've already banked 60 pips. You've already taken some off the table. Make sure your stops are break even or better on the rest of it. I do think we need to be respectful of this zone, Marco, for a possible rebound off that, at least in the near term. He says, I see divergence, but I'm still bearish. Yeah, and I think it is still a bearish trade. My concern is that this sell-off near term can see some recovery. So one of the other regions, one of the other things that you're looking for within the confines of this 29 spot 29.30 region, excuse me, you also have the 100-day moving average. So the 100-day, literally, look at that. Look at that. You know what I mean? So you could see a little bit of a pop here. Nothing to be super concerned about, but definitely a near-term rebound is, I think, is a reasonable assumption for us. Let's clean this up on the weekly. We don't need on the daily. Don't need all that noise. So here's Euro Yen on the weekly, just to put things in perspective. Sat slope. All of these highs, guys, have been derived. All of these lines have been derived just from this slope. So we took a parallel here, acceleration, support, acceleration, acceleration, support, support. That's down here. Same parallel off of these highs, right? You got resistance, resistance, break, acceleration, support, resistance. Look where we turned from. Confluence with the 618 retracement of the yearly range. So absolutely, the downside was the play. This was a big, big region, 3260. My concern again is that this initial downslope, you see a little bit of a recovery before we move again. But you have to kind of keep the near-term focus on that chart. On this, you basically have to look for either a rebound off this for a rebound back towards channel resistance, or if this holds right now, we rally up to here, it might be a decent play to actually push it lower again. Weekly S2 at 129.47. Sweet. Right here, right at these lows. Nice. Who was that? Pooja. I should have known that was you, Pooja. Pooja loves using the pivots, so absolutely. Weekly pivot adding further conviction for that zone is great. And that converges with the 100 DMA. Yeah, absolutely. No questions from you, Ty, on this? I thought you were a big euro yen trader, no? So that is euro yen at these levels. Pretty interesting. He says, I'm taking notes. More than welcome, sir. Hey, you're more than welcome, Mark. I appreciate that. Cheers, sir. All right, guys. Any other questions or comments? I'm sorry, I'm feeling a little under the weather today, so might be a little off. But do let me know if you have any other questions or trade setups you want to review. Dollar CAD. If this turns again lower and I'm not in it, I'm gonna kill someone. Okay. Okay, guys. Got about 8 minutes before the open of U.S. trade. Best of luck trading today. Keep in mind again, we don't have much major event risk on tap, so keep your eye on price action. Um, and these political concerns with Italy and the IMF thing is kind of big for global growth. But most of what the IMF noted with regards to global growth concerns is trade tensions. So as long as the market's assumptions are correct, which is that the Trump administration will at some point close the door on a decent new negotiations with China, that's what the IMF is using as sort of their major factor of why they're lowering global growth prospects for 2012 or 2019 rather. So keep that in mind with a grain of salt. Keep your eyes on price action, and best of luck trading, guys. I'm off tomorrow. We'll have Jamie up with the weekly strategy webinar as always, and I will see you guys on Thursday morning. Best of luck trading, guys. Cheers.